All right, let's talk the best highlight since yesterday, and that is when is a bottom, a low, right here. But you know that after it's already rallied and has this V-shaped pattern, that's not going to make any money. The opportunity only comes when in real time you can make predictions that don't feel like good guesses when you're right. And what do you do to make a better prediction that this indeed could look like this before it looks like this? So let's take it back. Let's go and magnify it here at the bottom left chart and see what we saw around 4 even, 5 even that made this look like this, the V-shaped bounce. In any break, and this was a nice break, you're going to get people who are short with money into it, looking to cover, get out for a profit. You're going to get people pissed off that they missed the short and be late and getting short in the hole, as we call it. And you're also going to get people that early tried to buy it, breaking the bottom too early. So what you need is those people who are trying to buy it and get long, picking a bottom, to get shook out, stopped out. So there's less longs, LL. You need to also get late shorts that create more shorts, MS, right? More shorts and less longs. Create the opportunity and probability price will go up. So in any break, where could you get shorts to load up and create that, and longs to get shook out and create that? Also remember this: less longs equal less what? Less sellers. How do you know that, Anthony? Well, when I'm long, I'm a seller to cover that long, and so are you. When you have more shorts, you have what? More buyers. Why are you a buyer when you're short? Because you got to get out of that short with a buy order. So this is logic and it's not debatable. So when you get this, you start to truly understand the golden rules of why price moves. And now you need to use the tools and find the tools that are going to help you make that determination. So it's a probability and not a guess. So again, where could you get this V-shaped recovery and understand that in here instead of up here? Because a fifth grader up here could tell you that bottom was down here because everybody in the world could see it. So using the more shorts, less longs, what we have in this column are these hollow green bars, which indicate green for longs. And because they're hollow, it's indicating longs that are exiting with stop orders. I'm not going to go into depth and detail on how more sell stops are used to cover a long position, mostly for a loser, but that's the case. And so when we identify that indeed longs are puking, that creates the less long side of the equation, right? So a couple things here. When you see this kick out, like that, what you have to do is compare it right up here. That's what it looks like up here, but you compare it to other moments when you had longs puke, and you could see it's almost double the two prior biggest long puke moments. All right. So you by far have the biggest long puke LP, which creates less longs, which creates less buyers. No, I'm sorry, sellers. Longs puke creates less longs, create less sellers. You tell me, if you are looking to predict where price is going to go and someone tells you, hey, there's less sellers than there was 5 minutes ago, hey, that's pretty important and necessary for price to go up. Less sellers, right? Price of anything. Less sellers, better chance to go up. How can we get more buyers? Well, like I said, if you get more shorts, you're going to get more buyers. And we see that when this kicks out right in here. So let's watch this come and then this come in our puke tool. And so I'm going to rewind it. Price comes down in here. Bam. All these longs start to puke. And then all these shorts come in. Look at this number 273 versus 266. It takes over, which means there's slightly more shorts than longs. Boom. They come in again. This is the laser, which is also shown here. Green laser, red laser means more shorts and longs, and you get this flip, and the market goes up. Now, this is not hindsight, but it's also something that most people will never get around to learning, understanding, let alone having the tool that starts to show you it. without the explanation. And most people make the mistake of trying to learn things that aren't really important and giving you a probability to predict price. In fact, most people who trade don't even know what it is they're trying to do and be able to explain it like it's the back of their hand. So if you can't explain what exactly your job is, how are you going to explain what an advantage you'd want to create to provide the best tool to get you to do what you're trying to do? And so what you're trying to do, what we're trying to do is simply predict price, where it's going to go in the next 5 seconds, the next 5 days, the next 5 hours, whatever. Where's price going next without being hindsight's 2020? And then you work backwards and say, well, what would give me an advantage? First thing that would give you an advantage is having an economic number before most of the rest of the world, but that's not really practical. It's to know a Fed comment before a Fed comment hits the wires. It's to know the Fed statement before it hits the wires. It's to know information before most of the rest of the world knows it when it drops down the wires. So that's not really realistic or practical. But what is starts to understand other people's positions. If you can get an edge on where other people are trading and where they're opening and closing positions, gives you the ability to make a better prediction with higher probability. So you're not feeling like, again, when you're right, it feels like a good guess or some magical line on a chart that you often fall a victim to learning and support resistance, but not understanding why support works when it works, why resistance works when it works. The ability to understand other people's positions instead of trying to worry about your psychological reaction to being long, being short, being right, being wrong is where people make the mistake. It's not the psychology that'll get you to calm down. It's actually knowing what you're doing and having the right tool for the right job. And then the tool could get better, just like screw guns are better now than they were 20 years ago, but the concepts and use of a screw gun is still the same. It didn't change the fact that you press the button, the trigger, and the thing goes right or left to screw in or out a screw. It is essentially the same thing, only it's more efficient. And so the concepts and techniques should never change. And the reason price does what it does, no matter what the product or service is. And most people that try to predict price have no idea what the hell makes it move. What kind of chance do you have in finding the tool that would create an edge?